Well, the manufacturing and startup sectors have emerged as key to fueling the growth in the Indian economy. Now, with the government firming up Budget 2022, India Inc. has a host of demands and expectations that span simplification of GST compliances to offering incentives for the manufacturing sector reeling from the pandemic. For startups that saw a massive inflow of FDIs with the IPO boom, there is also a need to relook the taxation models for investors funding growth in unlisted companies. In today's discussion titled Budget 2022 and what it brings for the startup and manufacturing sector, we will assess the needs and solutions that India Inc. is expecting with views from leading CFOs across sector. Good evening, everyone. I'm your host, Gautam Srinivasan, and joining me on the panel are Rahul Cordero, CFO at Wipro GE Healthcare Private Limited, Kumaraswamy Virupakshan, CFO at JK Paper Limited, Sharat Sodhani, CFO at Wakefoot Innovations Private Limited, Himanshu Jindal, CFO at Orient Bell Limited, and Sumit Kavaria, Finance Controller at Clear. Thank you everyone for joining us on this talk. And before we begin, here's a message to our viewing audience to fill out an online survey at the end of this discussion and submit it to us. All right, let's begin with the expectation of an ignition of the Capex cycle, which is seen as key to driving growth post pandemic. So, Rahul, we'll start with you. We have been hearing murmurs that a higher outlay on capital expenditure and healthcare schemes aimed at boosting India's further inclusion in the global supply chain is likely in Budget 2022. What sort of boost do you expect from such a move for India's economy?
Thanks, Gautam. Great to be here. I think it will be a welcome addition to the budget to see additional capex and added healthcare schemes. Healthcare, like we all know, is an extremely capital intensive space. So if whether you look at a provider like a hospital, the amount of capex that they really need to make to get up and running, or whether you look further up the value chain and you see developers and manufacturers and distributors, everyone really has a heavy capex bill at the end of the day, right? So any help on on schemes like was announced 50,000 crores recently by the finance minister to kind of aid the healthcare space at a concessional interest rate. All these kind of schemes bring a big boost to the industry as a whole. The PLI scheme as well that was introduced recently across sectors really brought a huge manufacturing boost. If you take, for example, in the healthcare space, it brought in thousands of crores of investment for localization of healthcare manufacture. You have the electronics and semiconductor space. So the huge one is really the 76,000 crore scheme that was released for semiconductor and display fabs. So these are really going to change the game for manufacturing in India. We are kind of going up the value chain. It develops the ecosystem for electronics and hardware manufacture here in the country and changes the face altogether. So all in all, I think there's a huge benefit that will come in terms of employment and everything else. It's just a cascading effect that will come from all these schemes that will bring a huge economic impact to the country.
All right, broadly, healthcare spending is also expected to go up in this budget. Are you tempering your expectations or are you actually expecting a big push coming into healthcare, Rahul?
So the healthcare spend has been very positive of late. If you look at the last couple of budgets, it's almost doubled. We've gone from 1.2% of GDP to about 2.5% of GDP in the last budget. And COVID is turned things around. For better or for worse, we realize now how much of infrastructure we need to build in this country to really provide access to every citizen and every patient and bring it closer to them. So you don't have a patient from the Northeast going to the South for treatment. So the expectation is this is going to keep growing. Healthcare is a sector that I think when we look at it across the board, healthcare, we've got to start with the demographics and the patient outcomes. And you think about it, as a country, whether you look at doctors per thousand or beds per thousand, you just have we're probably at a third or 25% or a fourth of where we really need to be, even if you compare against global averages, which may not be the best measure. So the spend has to increase. It has to increase from the government side. It has to increase from private players side, and all of that is going to fuel the healthcare spend, in my view.
All right, let's also see how the broader startup environment is also going to shape up, considering, the headlines over the past 2 years has been all the funds which are coming in terms to invest there. Kumaraswamy, the center is expected to incentivize and promote consolidation in the startup environment by allowing for a carry forward of losses and accumulated depreciation during mergers and acquisition. Now, with your experience in overseas and domestic M&As, how effective do you think this move would be in leading to an increase in M&As?
Good afternoon, Gautam, and everyone else. I think the startups will always have to be complemented with scale-ups. Startups with just ends up with startups doesn't mean much. And typically, it's innovation. After that, proof of concept, and then and then prove it, and then you have this phase of test marketing, etc., and then you go scale up. And typically innovation is not necessarily the preserve of bigger companies or something. And typically the startups, as you know, are all small outfits, and they have to continuously raise funds as they go along the path. And there were 2 or 3 conditions which are imposed under section 79, which said either 51 persons holding 51% have to be holders both at the time when the loss was incurred as well as in the year of set off. Of course, in 2019, they came up with some remission saying if the 100% of the holders are shareholders, even at the time of adjustments, even if they don't hold 51%, they can continue to avail of the set off of this one, or 7 years, which is of course irrelevant for this purpose. So this was coming in the way of raising funds, because most of the funds for startups come by way of equity. And that dilutes the existing shareholders to less than 51%. Sometimes it goes as low as 10% or even low. So, but all the accumulated depreciation and losses, etc., these startups were not able to carry forward because there is a change in shareholding. I think if this is done, this is a welcome measure, and I think it will definitely boost the ecosystem for the startups. But will it lead to an incentive of mergers and acquisitions? I have my doubts, because the quantum of losses which will be available with these people at any stage will not be so much that will have an economic value for the acquirer or the new investors. And I don't think that is going to be the way it is going to play around, but it will definitely facilitate faster raising of funds without losing the economic value of the current enterprise.
All right. And for your manufacturing sector, considering the government's focus has been, make in India, Atmanirbhar Bharat, any expectations on that front to kind of boost the manufacturing sector on this budget?
No, I think going has been good, and except that there are some faltering demand from the rural sector as well as from the poorer sector. The demand growth has to be somehow the consumer demand will have to be somehow cared for and revived. That is definitely number one expectations from our side. And the Capex cycle, aided with the government's spending programs also, is beginning to look up. But we shouldn't be overconfident or too very complacent about it. It has to happen over a sustained period of next 2 or 3 years for us to be back on the firmly on the growth path.
Absolutely. A sustained capex cycle is the need of the hour, especially if we need to meet our growth targets and that elusive $5 trillion target, which is supposed to come in by 2024-25. Still miles to go before we sleep. But on that note, Sharad, the Indian tax department functions as a startup trying to fix inconsistencies in processes and brings about greater stability in the system. What, in your opinion, should be the major ask from Budget 2022 in terms of financial compliances for both manufacturing and startup firms?
Hi, Gautam. Thanks for giving this opportunity and sharing my view. So I firmly believe that the biggest problem of our today's tax system is it's very, very complex if we compare it with other countries, right? Government has done a lot of attempt to simplify it, but instead of simplify it, they keep making it more and more complicated. classic example is GST, which came with the idea of one registration, one seamless tax and all, but it looks like more complicated than the VAT systems, right? So I think in our country, there's a huge cost of compliance, which every company is bearing. Larger one are able to handle it, but the smaller one are finding it more and more difficult to comply with. And that is the first step which need to be done. I can break down these into two sections. One is your direct tax compliances, and another is indirect tax compliances. If you look, let's say GST kind of thing, of course, GST is not going to be part of directly in this budget, but uh, point is that if you operate in 5 states instead of one registration, 5 registration, 5 different audits, different returns, and then the complexities you have added that some people are filing quarterly returns, some people are filing monthly returns, large SSCs, right? And then you have on top of added that you can't now take credit if another party has not filed its return GST to A and your 2B is not matching. All these are just adding a paperwork and add-on work into the finance team and compliance team. The only good thing which is happening is job creation into the finance system and maybe more and more cases for the lawyers and litigation experts, right? So if somewhere government can simplify all those things, for example, it can allow all the credits on GST, no disallowance, even if it is at the cost of increasing slightly the GST amount, could be of very help. There are cases where a lot of input credit is getting accumulated at the end of manufacturers or startups specifically, which are in the initial phase loss making. Some mechanism to refund that input tax credit would be of great help, right? Similarly, coming on the direct tax side, right? ESOPs is a very good tool for attracting talents by the startup. And if you see these startups, they may not be excellent paymaster when it comes to the cash thing, but they compensate talent by giving good equity in the good equity in ESOPs, right? But the way ESOPs are taxed, it is not very effective for the employees, right? My view here is that not just for startup, but for any unlisted company, ESOPs should be taxed only at the time when an employee is able to encash them, right? Today, if you are a registered startup, then you have few exemption available where up to 5 year it is not taxed, but the moment if you leave your company before 5 year, you have to pay the tax. Now imagine the situation of an employee. He has got nothing from the company or the shareholders, but he end up paying the tax from his pocket. Same with the private sector company. So I think these things should be simplified to encourage the talent, and probably that's one of the reason why a lot of youngsters, smart engineers and all look for the foreign countries, US and Europe, instead of working in India and using their talent for the development of this nation, right? Similarly, if you look section 79, what the previous question, right? They have put it a limit of 100 crore. The current exemption is available, but the condition is that turnover should be 100 crore. Now, good startup easily cross the limit of 100 crore, right? Ideally, it should be minimum 1000 crore if you want your startups to become from a small size startup or a medium sized startup to a unicorn size startup, right? So government has to think little big. They have to trust the people. Most of the laws are designed with the assumption that taxpayers are here to cheat the government. I think the mindset change is required where they start with the assumption that out of 100, maybe one person is here to cheat the system. But just for one person, let's not punish 99 people. So if they start putting up simplification in all the laws, automatically compliance will grow up and business will become easy in India.
All right, taking all those 3 points into consideration, Sharath, we're seeing a lot of tax buoyancy come in for the government in terms of GST collection. So I'm wondering whether they would change things just when things are starting to improve. So in terms of simplification, I don't know if that's going to happen, but Section 79 looks like a possible candidate because since growth is the theme for the next 2 or 3 years, a strong growth, even if it is fewer, even if the government sees inflation, it is in favor of growth. Do you think Section 79 stands a better chance of happening? And also ESOPs, that problem has been going on for quite a while right now. I think those two are candidates for change versus, say, simplification of the system, or do you see some sort of simplification at least happening from the GST front, Sharath?
To be honest, I am not very optimistic on the simplification front, right? But of course, I am quite optimistic that government will do something on the taxation of ESOPs front as well as the Section 79. these two things I'm quite optimistic. Plus, I'm hoping that some more benefits will come for startups and MSME sectors.
All right, it's always about balancing expectations. Sumit, let me bring you in at this point in time. You've heard our panel speak on their asks and expectations, your opinions, and what, according to you, what should be the major asks from Budget 2022, especially in terms of financial compliances for both manufacturing and startup sectors? Because we've had this discussion over and over with leaders from a variety of sectors where they appreciate that things have changed, but they also feel that many more things could be done to kind of simplify and reduce the cost of compliance. So your thoughts on what could potentially happen in 2022, especially in terms of the budget and in the compliance universe for both manufacturing and startups?
Good afternoon, everyone. So, there are a lot of expectation from this Union Budget 2022. While some measures were announced by our Finance Minister, but still a lot left out to make the compliance much easier. Primary ask, just it's not just for manufacturing, but for all the Indian business ecosystem is today, like a GSTR 9, which like annual return is a big pain for every company, right? They have to file this return yearly once, but there is no option to edit it or amend it. Once you filed, it's filed and freezed, because like your GSTR 1 or 3B also, there's no way you can amend it or edit it, due to which you can understand, in India ecosystem, every month filing or quarterly filing, there are a lot of reconciliations issues comes out when you prepare your annual return, and everyone rush to file it out, and they get to know some things later on, but they can't do any edits, and which leads to a lot of litigation, and people lose a lot of input credit. So one thing, I believe government should give an option at least to amend or edit return once, because if they do, if any businessmen have done any mistake due to any reason, at least they should get a chance to amend it, because it will not impact government, as well as it's compliance wise, people would like to be compliant, but many times it's happened they have made the mistake. So one thing that I believe will help the ecosystem completely. The second thing, as you understand, a small startups, right, or small companies who just start their business, first 3 years they will have only 1 or 2 people in finance. The same person is taking care of finance, tax, everything. So today government have brought the QRMP scheme, like quarterly return monthly payment scheme, but it's for saying it's a quarterly process, but as every company needs to compute their tax liability every month and then make the tax payment every month, means it's the same activity which they have to do every month, and counterparty will not get a credit unless until this person have done the IFF, monthly at least invoice upload to the government. Means ultimately, even though they have adopted for a quarterly return, but they are doing entire complete activity monthly, so the real benefit is not going to the small startup. So our suggestion is a government should give a first 3 year option where people can make a payout also quarterly rather than computing every month, because it's a very small companies. As a cash flow also, it will not impact the government, but as a compliance burden, it will really reduce. So instead of monthly computation and monthly payment, if we move to a quarterly computation and payout, in the year 4 time, it will really help the startup world and the compliance, because first 3 year almost founder does everything, and they not have money to do a lot of things. So this will be a great help for the ecosystem. And the third important part, we believe, if today e-invoice, e-waybill, a multiple documentation which needs to carry for a manufacturing company when they transport the things from one place to other, if government can eliminate or make those two documents one, that will also reduce a lot of compliance burden to these manufacturing and other organizations who are dealing in the goods. So these are the three important things which can ease, which can make the ease of doing business without impacting overall the tax collection, anything.
All right. Broadly, do you see more focus coming on the indirect tax front versus the direct tax one, since we are still recovering from a sort of a pandemic-induced slowdown? So do you think the focus on the budget is going to be more on the indirect tax front?
Normally, indirect tax, because now government have every month they do some meeting and can do any change amendment. So again, in budget, 70-80% focus will be mainly on the economy, how to reboost the economy, and direct tax side, and few things we are expecting in budget. Otherwise, these days, every month there's a budget for indirect tax. So that's the way ecosystem now have changed.
That's a fair point, but we'll see how it pans out. Himanshu,
Yeah.
let me bring you in at this point in time. What's your wish list for budget 2022 with regards to the manufacturing sector, especially when it comes to rationalization and simplification of taxation and expanding the Make in India 2.0 mission to more sectors? I think we cover 27 sectors currently. Do you expect more sectors to come under its ambit?
So thanks, Gautam. Thanks for the introduction and the question. See, I represent, you rightly said manufacturing listed company. The sector that I represent is also building materials, tiles more specifically. You see, for this year and the next, I think the three relevant themes from a manufacturing point of view very clearly are investments, inflation, and consumption. Yeah. So in investments, I think, our balance sheets today are pretty strong. We've already announced Capex. We can potentially announce more and more. So, expansions in terms of volumes, better products, etc., coming up, sustainable products getting offered to the customers, cheaper products getting offered to the customers is something which we can definitely do. What we are waiting for are cues, largely in terms of inflation and, like I said, consumption. So from a manufacturing point of view, especially for a sector like us, where almost 50% of our costs are energy costs, one way or another, it's either gas or power or even freight for that matter. You've seen the kind of inflation that we've all seen here. Yeah. Gas prices going up by 50% straight away. This is not very comfortable. Yeah. My wish list would be, and again, I'm saying this is a wish list because like Sumit also mentioned, a lot may not be done via the budget. It could happen otherwise also. So my wish list would be that these energy, elements somehow are brought under the ambit of the GST, so as to reduce the cascading impact of taxes. This can also, in a way, create more demand and thus be GDP accretive that way. So that's the number one wish list. The other, like I said, on the consumption front, from the sector that I represent, we supply to real estate end of the day, which is taxed at 1 to 5%, not more on GST. The output liability is only 1 or 5%, depending on what sort of a project it is. But on the input side, the supplies that we make to real estate, as building materials, whether it's steel, cement, or us, we are taxed at anything between 18 to 28%. Yeah. This makes the entire system very inefficient. And this is what has to be brought down. If we can try and reduce this cascading impact of taxes, housing can become more affordable, and which is a key priority for a country like India. Even the smaller tweaks on the consumption front could help, personal taxation, for example. COVID has been challenging personally for all of us, all people. Majority of Indians have been challenged. Any tweaks on that count, let me say on the personal taxation front, whether it's, let's say, interest on borrowed capital for construction of your own house, or standard deduction for salaried class. These are again wish lists. I don't know how much is practical, but yes, these are pro-consumption, pro-GDP. So I would definitely try and request the Honorable Minister to consider these. Moving on to, even, exports, is a priority for the country. A lot has been invested into building up capacities for exports. This year, again, has been challenging in terms of not only the energy prices going up because of our, because of the reason why our cost of production has gone up, but also because of the container freight issues. The challenges still continue. The freight is higher by 10 to 15x of what it was, pre-pandemic, so to say. So, so there has to be incentives coming in one form or another to revive the sector, do more exports. Again, gets more foreign exchange, helps sustain demand locally, all of that is there. So, these are larger things on consumption. So that's the wish list, the broader wish list, I would say, at this time.
All right. Anything to add on the input tax credit restrictions front? Removal of blockage of input GST tax costs on construction. A whole lot
Absolutely.
of things are still remaining. Anything on that front that you'd like to add, Himanshu?
So I said, we supply to real estate, which is taxed at 1 to 5%. That is, very clearly in. But maybe what the others also mentioned very clearly, unequivocally, is in terms of simplification of the tax, the tax structure itself. GST is very
and deduction
complicated.
of tax cost on constructions against output GST. I guess that would
Absolutely,
also be very much
absolutely,
welcome by the
absolutely,
industry.
absolutely, absolutely. So it's very complicated, very tax inefficient. There are litigations going on, things which have been settled at the level of the commissionerate, at the level of the appellate, at the level of the high court, just because of the quantums involved, just because of certain mindsets get litigated again and again. So these are things which have to be resolved. I think the larger picture is that India is a growing country. Yeah, we are a developing country, and we have still miles to do. Manufacturing still is nowhere near the aspirations that we have set for ourselves, in terms of the 25% share to the contribution to the GDP. Now, so a lot has to be done. We are still some 7-8% away from that mark. Broadly this, Gautam, I think, this is what we'll all aspire for.
All right. From a budget of potential, the time is now for a budget of action, especially as the growth imperative grows in a very uncertain economic environment. That's the view coming in broadly. But looking into the finer issues, Rahul, in terms of consolidating different compliance requirements to enable ease of business, what would you suggest? And what would you expect from budget 2022? Because this is a common complaint. We've spoken about this in terms of, so many compliance requirements. Let's simplify. The problem is, what's the starting point, right? And the government might think, as I mentioned earlier, that if tax buoyancy is going up, now would not be the time to do anything to kind of mess things up. So in terms of consolidating different compliance requirements, if the government is serious about ease of business, what should be the top priority there?
So, a couple of things, Gautam. I think, even beyond tax to start off with, as we are looking to grow different sectors, single window approvals to cover the entire gamut of regulations and approvals that, say, a single hospital needs or a manufacturing unit needs. One window approval process is something that I think would be a big ask and as a start, at least a few key sectors. And that's one. Coming on to the tax side, I think, I think Sharad mentioned this, right? There's so much going on GST that, and I think Sumit said this as well, there's updates that come in on a real-time basis. So one, how do we just consolidate and simplify? What is the expectation from the industry on the filings, on the returns, and so on? And then you cross-reference from GST to direct taxes. So for instance, you have your TCS, which is a new introduction from the last couple of years. How do you link that up to GST instead of putting additional burden on compliance for arguably a very small sum of money? So it almost becomes impractical to go and collect that money for the person who has to charge TCS. So how do you kind of link that up to or just make a TDS or link it up to a GST so that it just becomes a seamless process for us as filers? I think these are the big ones that come to mind immediately, Gautam.
All right. And anything coming in from, say, a price transmission mechanism from, because if the government wants, if the government provides SOPs to manufacturing and other sectors, but says that, at the end of the day, if you are reducing costs, the customer should also see that reduced cost reflected in their bills so that pushes up demand, which is the key need for the. So anything on the price transmission mechanism coming in?
So I think, as obviously, as GST processes and rates are rationalized, there is a direct pass on, right? Because there's no unjust enrichment that I think any of us really look for here. To your point, for instance, in the healthcare sector, there's a break in the GST input tax credit chain, right? Because the hospitals are exempt; they're not zero rated. The moment they're zero rated, you get an uninterrupted chain of credits there, which will then translate into something for both the provider or the hospital as well as the end patient. So I think that kind of those kind of things would help. The other way of looking at it is more SOPs, more benefits in terms of whether that is production linked incentives, etc., can translate into benefits for the end consumer. So I think that building the transmission rates along those lines and ensuring that it benefits the end patient and end consumer is going to be critical.
All right, Kumar Swamy, let me bring you in. Speaking of production linked incentives, how big is it going to be right now? Because it's been relatively successful so far, but where do we go from here in terms of, incentivizing private investment? Because we've seen in the past that, an outside factor that reckless promoters have fueled this huge NPA burden on the Indian banking system. In such a state, in terms of incentivizing private investment, what needs to be the government's roadmap right now, in your opinion?
Can I answer the question that you asked Rahul first before I come here?
Sure.
Yeah. Okay. In the last about 2 or 3 years, DPIIT has done excellent work in terms of reduction of compliances, and recently they have issued some 14 or 15 states together. They have come on a similar platform, including the center. Great work. But for every one simplification that DPIIT announces, SEBI, GST, and IT announces at least 3 each. It has become a big nuisance now. In fact, I keep telling my friends, if you make enough number of laws, you can make everyone a criminal. That's the state of things that we are headed towards.
What do you think is the reason, Kumar Swamy? Is it this
Reason,
lack of trust?
Mindset change. The control attitude, control focus, control urge in the bureaucracy is very, very high, as well as government. I'll tell you one example in this Labuan area in Malaysia. It's a tax-free zone. You pay 1 or 1.5% of tax. You are exempt from everything. You don't have to pay income tax. You don't have to pay GST. You don't have to pay any service tax, nothing. Peculiarly, you don't even have to produce your accounts books to any of them. They are not even entitled to come and inspect. That's the kind of mindset they have, and that is the ultimate facilitation of ease of doing business. I think that I don't think we.
But we've tried it here, right? Special economic zones have happened, but they've not gotten the kind of results that folks were expecting. What do you think the government needs to do right now in terms of incentivizing private investment?
See, the incentivizing private investments, as I said, the demand is definitely, at least in the manufacturing sector, if you look at it, the capacity utilization is about 72-73%. And there are very few units which are operating at near 100% or 90-95% kind of capacity utilization levels. Obviously, to expect any big boost to investments from that sector, which is already having so much of capacity, is not going to be that easy. And also there is a serious need to weed out the inefficient ones, which is happening definitely out of GST. Many of the uncompetitive ones which are thriving more on tax dodging, they are all going out, and that perhaps is the reason why this investment cycle is coming back again. And the other facilitating factors like this land acquisition, which has become a terrible nightmare. Environmental clearances, although the procedure etc is laid out, but ultimately when you get this one, it is so very time consuming. And the procedural easing of doing a business in the activities leading up to the enterprise starting, those number of things would need to be looked at, and I should credit DPIIT is doing a good job of it. Obviously, they are also dependent on so many other 38, 40 other departments, and they have to sell their story to them. I only hope that slowly, they will, be able to prevail upon them to, slowly ease up on various things. As far as tax incentives are concerned, it is up to the government. It's not that, for the startup thing at this phase, it's too very, burdensome or something. But any compliance reduction is always beneficial. And one last point I want to make is government is definitely investing in infrastructure. Nobody can deny, but I think there has to be a refocus of where they are investing. Ports etc are going to come to a standstill very soon, or the length of clearance time etc is going to be a constraining factor, especially with the kind of stupendous growth we are seeing in exports. But roads have become the big mantra. Make a 6-lane to 8-lane and 8-lane to 10 lanes, and where that is one already existing, put one more line and this freight corridor, etc. All fine. But in UP, the kind of investments it is happening, all these investments will have an economic return in 2035. Not immediately. I don't think they will ever be used economically in the near future.
So what can be done then if the focus has to be immediate? I get your point that whatever infrastructure investment is made, the returns are going to show up at 2035. In that context, then is $5 trillion an achievable target in 2024? Because that would have required investments to have already been made 5-6 years ago, right?
Yes. 5 trillion, yes, it has to happen. And the only thing, the kind of timelines that we had, it may not happen. But definitely, I think the infrastructure is getting created. But the surrounding activities that have to be played up by the private sector, whether the procedures as well as the demand creation, which is is it happening or something? I have my doubts. So time-wise, it might get slid by a couple of years, but hopefully within our professional life, we all will see it.
All right. We are all hoping for good things for the Indian economy, growth to come back strongly, and of course, a strong recovery in a variety of sectors. But MSMEs, I want to talk about that, and I'll bring you in, Sharat. MSMEs, they are a big contributor to economic growth in India as well. But of late, we're seeing large corporates, they've cut costs, hived off debt, and they seem to be in a better shape than MSMEs. So, in your opinion, what needs to be done to boost growth of MSMEs once again? Because every budget, this topic comes up, MSMEs, what needs to be done? There's a whole lot of discussion, but at the end of the day, we still see that the MSME picture still needs a lot more improvement than what's required. What can change the picture definitively, in your opinion, Sharad?
So again, it goes back to the basic question that why large companies are becoming large and MSME are not able to survive, right? The way we have developed our economic system, our tax system and all, in my initial pitch also, I said that large companies are still able to manage with their large compliance teams and finance teams and all. It is becoming more and more difficult for MSME. If we look 10 years back, the regulations was easier. MSMEs were somehow able to bypass, or they were not required to comply with so much of requirements. So they were thriving, right? But as we bridged gap, as we keep plugging all the loopholes, it become more and more difficult. So first thing again goes back, how to simplify it and incentivize investment into the MSME. Today, if you see the young and educated people who come out from IIT or a good institute, everybody want to go for a job because it guarantee you a steady income without risk or with a low risk. Whereas in MSME, neither income is guaranteed nor the risk are low, right? So first thing is that simplify it. Initial 3-year or 5-year, give them as an incubation period where all the compliance requirements are bare minimum. I will give you interesting stats. According to the Ministry of MSME, right? There are 6.3 crore MSMEs in India, right? But only 53 lakh are registered with them, which means less than 10%, right? And all the benefit what government has announced for MSME can be accessed by these people only, because rest have not registered themselves, right? Question is why they are not able to register themselves, or why they are not keen to register with. Somewhere the mindset is that the moment we are registered, we would be on radar of someone. How to solve this mindset problem? That is a question. So first, we have to make sure all these MSME formally get registered. Second thing is how to provide a protection system to them. For example, to micro and small, there is a rule which says that large organization need to pay within 45 days, right? Can this be extended to medium? Because medium organizations are the one which can be large organization in 5-year, 10-year, right? But if that production is not available to them, if they are getting their payments after 60 days, 90 days, or there is nobody to protect them, it is becoming a problem for them in terms of reinvestment or circulation of money.
But it's already there, right? When you look at Udyam registration, that clause is already there that, if you have raised an invoice, you need to get payment within 45 days. The issue comes in terms
of enforcement. Micro and small. That's for micro,
that's micro and small. Yeah.
I'm saying we need to cover medium also, right? Because small will become medium and medium will become large.
But the question still is enforcement, right, Sharad? Because while the law is still there, how do you enforce it to make sure that they get what is due to them?
See, from my experience, I will tell you, every large company send a mail to its vendor and ask that are you MSME or not? And if they are MSME, they try to ensure it is done in 45. Point is that people have not registered themselves. They say MSME, we ask for a certificate. They don't have a certificate. We don't treat them as MSME. It's that simple, right? Similarly, if you look income tax, right? corporates now are getting a tax rate of 22 or 25%, right? Most of the MSMEs are either individual or LLP or partnerships, right? They are taxed at 30%. How good or fair it is that a smaller party is taxed at a higher rate than a corporate?
That's
Right.
a good point. That's a good
If
point.
you are an individual, income crosses a crore, with surcharge, you are at 37 to 40% tax rate, right? So corporates are in India are now more tax efficient than a individual or a partnership firm. So
Kind
these
of a
things
mixed
need
message
to.
there. You're right. You're right. It's a mixed message where corporates get 22% and then an individual proprietorship or LLP or partnerships, those are at 35, 37% levels. That's a mixed
Exactly.
message there.
Right. So these kind of inconsistencies need to be solved. Otherwise, people will be just worried about compliances and all. When I speak with people, one of the thing what I have understood from a lot of people when we ask them to get listed on a lot of online platform and things like Flipkart and all, they are worried that the moment they are listed on Amazon or Flipkart or let's say these kind of e-com players, right? TCS will get deducted and immediately they will be on the radar of income tax or GST. Right.
Fair point. Fair point. So
These
somewhere
are
there needs to be mitigation measures and education measures saying that do this at the end of the day, it stands to benefit. But at the same time, remove those inconsistencies which you have pointed out, that you can't have a lower tax rate to a bigger corporate, and those startups and micro and small and medium enterprises which are there and trying to grow, you give them a higher tax rate which kind of prevents them from breaking that ceiling.
Exactly, and like one of my friend explained that the quarterly option is given to them, but for the monthly payment they have to do the same job, right? Either you keep it monthly so that at least larger party can take the credit, or you make it proper quarterly where even payment is done on a quarterly basis for them, right? Similarly, there are too many contradictory laws, right? Already there is a GST on an invoice. There is section 195Q. There is this one section under which you are supposed to charge TDS. Another section says TCS. Then people keep checking who is more than 10 crore, who is less than 10 crore, who is going to supply 50 lakh and all. So it's just a circus which we are running internally with finance team and our vendors.
Absolutely, and there needs to be some harmonization from an ecosystem level itself, right? Because you might raise your invoice to a company, and the company gets back, says, "Well, you have to fill GST 1 and GST 3B." But if you still have time and you've not done GST 3B, but the company pays you the money, they'll not pay you the GST charge and say that you first pay, then we'll pay across to you, which will lead to a sort of a compliance burden, which is anyhow they are battling.
There are so many small such things. I will give you one more example, right? In projects, there is normally a retention clause where you retain 5 to 10% money, and that's a standard clause in most of the projects, right? Now, as per GST, if you don't pay for an invoice within 180 days, you are supposed to reverse the credit. What should I do with the retention money? Either I can't have a retention or I can't take a credit. Right. So
that's true. That's true. Whole host of inconsistencies, and I'm sure there'll be a whole separate panel on this, which will go on for hours if we start pointing out inconsistencies. But hopefully, we see these inconsistencies being addressed, because we still give the benefit to the government. This is a learning exercise. It's an evolving exercise. Hopefully, the government takes feedback from the industry and makes changes which enables growth to come in, because that is right now key. We are not in an era where you can comfortably log in double-digit growth rates. It's a sort of a winner takes all approach where you really have to battle to make sure that the ecosystem is ready against global competition. But sure, go ahead, Sarah. Finish your point before I move on.
My last point here is that I think the government departments, be it direct, indirect, customs, they need to work in sync and harmony, right? If let's say GST is already there on invoice, it's in the tax ambit, and it's very difficult now to evade the tax on direct tax side also, because it's already reported in one system. There is no point of complicating from different angles that we will charge TDS also, TCS also, GST also and all. If it is covered by one department, assume you will get your money either today or after 1 year, but you will get it, right? Second thing is, government should think how to use IT as an enabler, how to reduce the discretion of government officers or tax officer in this entire process. I think that could be another major thing which will give a lot of confidence to MSME. Like in taxation for individual, now assessments has become almost faceless. Nobody is calling you, everything is happening online. Same way, if everything becomes for you, it would be a great confidence that things will happen systematically and on time.
Hmm. All right, we can keep discussing this on and on, but we're almost at the final leg of the conversation. So let me get some questions in for Himanshu and Sumit. Himanshu, India, is aiming at a fiscal deficit of below 4.5%, I believe, of GDP by 2025-26. Do you think this goal is actually achievable? And if not, what would you change to bring things back on track? Because it's like you want everything, right? You want reduced fiscal deficit, but at the same time, you want to control inflation, but at the same time, you want growth, you want more consumption. It's not really reconcilable from the perspective of somebody who's managing very unenviable position. So your thoughts on what can actually be done, the simple things that can be done?
See, Gautam, this is precisely the question that even manufacturing sector is navigating through today. Yeah. So fiscal balance, as I say, is basically the difference between the revenue and the expenditure. So while we have done a lot on building up revenues, in terms of rationalization of the taxes, widening of the tax base, etc., and these are things that the government should definitely do. But more importantly, I think on the cost front also a lot has to be done. So rationalization, optimization of costs. So we are not saying that we should cut down something so important as defense budgets or infrastructure or public spending, welfare schemes, etc. But with the kind of reforms that the government has pushed through all these years, whether it was GST, whether it was DMON, whether it was anything, making digitization as an enabler for a variety of things, the synergies have still not come in. More importantly, right? So there is a lot of cost which is unproductive, which could be more efficiently handled. So I think this also has to be looked into apart from let's say going only for divestments as a measure to shore up whatever we want to. Yeah. So yes, the small and short is yes, widen up the tax net. Don't increase taxes for now, for sure. Yeah. And the second is please try and look through your own expenses. We do so every single time, SG&A very clearly. Better power and fuel mixes at our end, better raw mixes at our end. We are navigating through that, and I would definitely want the government to even consider all of this to sure.
And I mean, one of the earlier conversations which I had with Swaroop Ripaka of Clear, the point which was brought up was the government is way ahead in terms of, when we look at the compliance landscape and using technology when it comes to compliance. So they have a lot of information on companies. Now, while we talk of, say, widening the tax base and everything, from a company perspective, since the government is ahead, what is the company going to do in terms of bolstering compliance right now? Because it's easy to say that, the compliance landscape is complicated. Sure, that's been said before, but what is the company going to do now in terms of, catching up to where the government is? Because at the end of the day, it's compliance. You have to follow it. Himanshu, your thoughts before I come to Sumit for his last viewpoint?
So there are plenty, so I think, so from a company point of view, so we are trying to do our best possible in the current scenario. Yeah, it's not a very difficult, not a very simple world that we live today in, especially post-COVID. More so for MSMEs, more so for smaller companies. Urinbel is also, that way not very large. So, we have our own set of challenges and we are navigating through that. So what we need is obviously, a lot of simplification, a lot of hand-holding, especially for a sector like us, especially for manufacturing, especially for startups, to boost the entire economy, so to say.
All right, let me get in the last word from Sumit. Sumit, you've heard all the panelists, clearly outline what's required, what's expected, and of course the inconsistencies which still exist in the system. Now, as a financial solutions provider, you work very closely with both industry as well as the government to come up with systems that can be integrated with, say, ERPs of firms to automate the process of GST and tax compliance. Now, one of the major challenges faced by companies is still the changing regulations in terms of compliance. So something which we discussed in this panel, which is that the landscape needs to have some sort of a stability in terms of compliance and laws. And this needs to be incorporated in returns filing as well. So do the solutions offered by Clear offer that flexibility of incorporating these changes in systems as the rules themselves keep changing?
Yeah, definitely. So as Sharad told, Rahul told, right? Like there are a lot of things which like government keep evolving, keep bringing the new things, right? If you see like last 3 year of GST, right? It's started with something like a in GST there will be 3 different type of forms. Then they like removed them. Then they came to GSTR 1, GSTR 2, 2A. Now new thing came 2B. Like that, government keep changing the things, and like new rules, regulations are coming on direct tax side or indirect tax side also, and a lot of compliances are like the burdens are coming to a bigger enterprises to comply with for all the small enterprises as well. So the compliance burden there is getting increased year on year. So the only way of businesses to adopt these changes quickly, and like changing anything in ERP is a cumbersome task because it's very costly and it's not possible every time you change your core accounting system. So that's what like modern technology, like what we use like AI and other digital tool, where business we enable the business, all the changes whatever is happening we do at our end, so they like companies can immediately can adopt those changes, like 100 plus engineers and CAs work regularly and bring those changes in the tools and make them like ready immediately. So that's where like a technology players are or playing a big roles. So like technology is now even being used in tax optimizations, like because of lot of things like a different GSTN, a company have a 20 GSTN and different ledger balances in different GSTN, right? How to optimize that, how to use a credit utilization. There are 3 type of ledger: cash ledger, credit ledger, which balance needs to use, SGST, CGST, IGST. So a lot of complexities are there where human doing every month correctly, it's almost like an impossible task. That's where technology play a role, where the because once you define the rule, system can suggest you what's the right for you, what's the best way to take the credit, and you pay what is lawful to the government, and you not block your working capital. So that's where like fintech like ClearTex comes in use, and we provide this tax solutions. So all our solution directly connect with ERPs. They integrate two-way. So entire reconciliation part done automatically. The results come to ERP automatically, and the instruction for a payments, whether to hold or not hold, everything can become automatically. And that's the way, like at least I can personally, like, being a controller finance head of Clear, I can imagine without technology, it's not possible to do the compliance. And so if you visualize a robust, agile, resilient future of for enterprise compliance is the solution being in right compliance tech partner. So you have to bring in the right compliance partner, then definitely these changes are possible to adopt. So that's why like as a Clear, we are working on that to simplify financials or like taxation for India.
All right, addressing inconsistencies when it comes to compliance with the help of technology. Where there's adversity, there is opportunity. Kumaraswamy, your parting thoughts before we wrap up the discussion?
I just wanted to throw in a idea beyond the immediate one. I think there has to be cross movement of personnel between the government departments and the user industries. At any point of time, government should insist at least about 10-15% of its staff is working in the industry. Ask them to go on a sabbatical, work them for 5 years, 3 years or something, let them come back. As well as ensure 15% of your workforce has to be drawn from the private industry at any point of time. Let them also work in the government department so that there will be a good cross-fertilization of ideas, as well as an appreciation of what is possible, what is not possible, how to simplify, so that an appreciation of each other's difficulties as well as the so the evolution of better systems. That's what I would recommend.
I'm not sure if they'll be looking forward to that prospect, the employees at least, but it's a fair point. You come into the other side, see how things work. That will give you a much more richer understanding in terms of, giving suggestions to policymakers as to how to make the system more simplified and easy for everyone to use. It's not like people don't want to pay taxes. They just want it simplified and easy enough way to pay their taxes on time without any issues cropping up later on. But I hope the government gets the message. As I said, it's a time of pro growth, so we got to see what things happen. But we have learned today what's on the wish list for the startup and the manufacturing sector as budget 2022 looms large. And of course, there's always expectations with every budget. So let's see what the budget brings to the table on this front. On that note, it's time to conclude this talk around budget 2022 and what it brings for the startup and manufacturing sector, brought to you by Mint and Clear. And of course, before we sign off, I'd like to thank thank all the panelists for joining us in this conversation and sharing their great expectations and understanding of the compliance landscape, and sharing with us the inconsistencies that still exist, and hopefully those get addressed. And of course, thank you to our audience as well for tuning in. Here's a reminder: if you're watching, do spare some time to fill out the survey form and submit it to us before leaving. Till next time, this is Gautam Srinivasan signing off. Have a great day, everyone.
Thank you.
Thank you.